Hello, it's Robert Miner with Dynamic Traders Group with our DT trade strategies for the week beginning September 20th. This is a short video we do for our Twitter and YouTube followers that we usually highlight one or two markets that have a potential trade setup coming up in the days ahead and the following week. And if you like what you learn here, check out our DT reports at dynamictraders.com. And if you want to learn a complete trading plan from entry to exit, check out my book, High Probability Trading Strategies. All right, let's take a look at a market we haven't looked at in a little bit, and we're going to look at it in detail. That's the gold market. Let's get started. By the way, if you're interested in the stock indexes, check out last week's video. Everything's pretty much coming to pass as we talked about, and nothing's changed, so you might want to check that out. Okay, here's gold weekly data. Now this is just the weekly close data. A lot of times it's good to just look at the closing data of daily or weekly charts, so you get rid of all the noise and you get a better idea of what the pattern is and what's going on with the market. So this is weekly closing data, and it's very revealing about the potential position. Now for several weeks, even 2 or 3 months, at each time we get in a position to make a weekly low, we've anticipated that it has the possibility of being a much higher time frame low. Well, they've generally only turned out to have rallies, and not even strong ones, for 3 or 4 weeks. These last two advances were each 4 weeks. So we're in another position to complete a weekly low. And what's really interesting about the current position is that this continues to look like it's making a correction. It's just continuing much longer than anticipated. But if you're interested, or if you have a little background in Elliott Wave, we had an impulsive decline that should be a 1 or 2, and then we've had this 3-section, essentially sideways, a little bit of a zigzag, ABC, and that's possibly has completed a wave 2 or B. And then because in the last couple of weeks we've declined and closed below the swing low I have labeled as a wave B, we're in a position to complete a wave C. So that makes this an interesting proposition to look at. So here's a couple of things coming up this coming week. Number one is the Fed announcement this Wednesday, September 22nd. And I've just marked off some Fed announcements over the past several months since near the first of the year. And generally, there's a reversal made at the time of a Fed announcement. Now, they're not always significant reversals. There's some kind of reaction to that announcement, though. Sometimes it's only for a week or two, and then sometimes it's for several weeks. But the point is, if you have a market that is trending into that announcement and there is some other technical positions that might be reversing and have some, in this case, some support, it's a wake-up call to be prepared for a possible reversal. It doesn't tell us how significant the reversal may or may not be, but again, more than likely we'll make a reversal next week just because of the Fed announcement. But here's where it gets a little more interesting, is there's 2 significant weekly time factors next week. One of them is just the real simple low to low to low. So we want to be aware of that time factor. And we got one other one that's pretty significant, is both of these past weekly declines have been 3 weeks. Next week is week number 3. So next week is the 100% alternate time projection of the last 2 declines. So we really want to be aware and awake next week for a potential weekly low. That doesn't mean necessarily that the market's going to take off in a big bull run to new highs, but at any time that the market's in a position to complete a weekly low, we want to consider a long trade in the event it's a higher time frame low, and in the event this entire decline from the May high is completing an ABC and it's not the beginning of a weekly bear trend. So our objective then becomes, what can the market do to signal that it is a higher time frame low? Well, let's go to the daily data. This is the December contract. Again, this is the close only data. gives us a little better picture of what's going on. So here's what's significant in this daily data. And the daily momentums have reached oversold. Now, it's not just one momentum. It's all three lookbacks. It's the 8, 13, and 21 are in an oversold position. Not just the 8, the fairly short-term one. It's only the fast line oversold. But that warns us that we're probably within a day or two, at 3 at the most, of making a daily low. So if you make a smaller time frame low with the potential of a higher time frame reversal, that's your setup. That's your trade setup. And that's what we teach in our DT reports a lot, is specific trade setups and triggers to enter the market and where you put your stop. But just be aware that because the daily momentums have a triple time frame position to probably complete a daily low in the next couple of days, what does that take us into? Well, it takes us into more or less Wednesday, that Fed announcement, and there's something else happening this coming week. It's the fall equinox is also on Wednesday. For whatever reason, we always want to be alert around the equinox time and the solstice time for probable reversals. And of those 4 dates during the year, the fall equinox is the most important and the most frequent that coincides with reversals. Why? I don't know. I don't have an explanation for it, but it certainly goes back to early Gann teachings. He called it, I believe he called it the day of infamy. That's the fall equinox. You can go back and check your charts. Lots of reversals in the financial markets happen around then. And when that equinox is on the same date as a Fed announcement, and we have 2 key weekly time factors, we want to at least be alert. And of course, here's a daily time factor. That was actually Friday, and that's the low to low to low on the daily data. Okay, so everything technically is almost in place to make a weekly low. So because we don't forecast things, we identify conditions with a high probability outcome. We then want to identify what can the market do to signal that that low is complete. And the reason we want to be aware of this is if indeed this is making a correction, as it appears to be, and we won't go into the details of that, but this is very much a pattern with a very, very high probability that it's part of a correction. If it's completing this correction, that could be very significant because the follow-through would be a resumption of the bull trend to above the June high. Now, in the last couple lows that were made, we only had 3 and 4 week advances, and not really significant. That could happen again. But the point is, we want to be positioned on the long side if possible. Now, you can position just on some reversal signal. That'd be picking the low. And if you follow the market during the day, that's a good strategy to have if you're comfortable with doing that. But you can just draw a line across this little swing high. I got labeled wave, minor wave 2 or B. That's a close at 1807.10. And that's a ways above the market. But if we're looking for a signal that's going to be a multi-week and maybe multi-month advance, that's still pretty close to the market. So as of this point in time, at least, if gold were to close the December contract above the September 14th close at 1807.10, that would be a really strong signal that not just a weekly low is complete, but a multi-month low was complete with the potential for continuing to advance to well above the June high. So that's how we're looking at gold, silver, and the GDX for that matter, all 3 of those markets. It's not a forecast that we're going to begin a significant multi-month bull trend to new highs. It's a setup, it's a trading setup for one thing, for at least a low lasting several days, of which we then want to be aware of if it continues and closes above the September 14th close, that's a more significant confirmation of the continuation of the bull trend. So that's what you want to be aware of in the days ahead. That's what we'll be looking at. And of course, if anything changes technically, or we get a different signal to enter the market closer to the market, or a closer in signal to confirm a weekly reversal, we update that every day in our DT reports, which you might be interested in. Okay, that's it for today. I hope you're all healthy and you stay healthy and you have a great week. Keep your eye on gold and silver in the days ahead for a reversal by the middle of this coming week. Take care. Robert Miner, over and out.